we have a permitted project in a jurisdiction such as the Yukon that adds up economically. We know it's big, we know it's low grade, we know people see this capital cost and their eyes bug out.
It's huge. Do you think there's a moment back in time when you sort of said, look, I tell you what, now let's just stop. Let's focus on making this, achievable, something that you were in control of rather than relying on another partner stepping in? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. It helps us understand if this is the sort of company that you'd like us to spend our time, money and effort on for you. And do leave your comments below. That helps us understand the sorts of questions you think we should be asking, how you think we've done, and of course, what you think of the company. You can also catch this as a podcast, article, or transcription on cruxinvestor.com. And of course, for our Crux Club members, you get early access to this video. Plus, if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Paul West-Sells. He's the CEO of Western Copper and Gold. They're a TSX listed company with assets in the Yukon. They've got their casino project. It's huge, about 14.5 million ounces of gold and about 6.2 billion pounds of copper. It's so big that it has restricted their options. So it's a question that they're oft asked. And today, Paul runs through his answers as to how they resolve this issue. So do they go big and try and find one of two strategic partners, I think, available to them, or do they try and reduce the size of this project down to 500 million heap-leach project or $1 billion project? Both very difficult questions to answer. They've got a bunch of work to do to kind of get them through to a point where they understand a little bit more about the project. They are hunting more high-grade gold because the current project is pretty low-grade. 2 billion CAPEX required for a 3 billion NPV8. So some quite big numbers in there. They have provided a kind of breakdown of how they've worked those numbers out in the PowerPoint. Form your own opinion, and also take a look in the description below at some of the other topics we discuss about how you get projects like this into production and the pluses and minuses. Anything interests you in particular, click on the number beside the topic. That's called a timestamp, and I'll jump you to that part of the interview. Otherwise, enjoy what Paul has to say. Paul, how are you doing, sir?
Very, very good.
Well, thanks for joining us, and it's early there. Still dark outside?
Well, not that early. 7:20. There's sunlight outside, so
is there sunlight outside? It looks quite dark.
Yeah, a little bit.
Oh, okay.
Yeah, it looks a little dark.
Looking forward to it. Hey, well, thanks for joining. How are things? You're in Vancouver.
I'm in Vancouver. Yeah.
But you've been up to site last week. You were telling me. So how are things up there?
Yeah, no, it was exciting. My first business trip. It was surprisingly, the plane was quite full, both on the way up and the way back. A lot of mining people going back and forth. A lot of exploration people going back and forth. But I'll be honest, a lot of people wanting to get out of the Yukon. It's a pretty small place, and come down to Vancouver, I think, and have a little fun. But it's site's going well. We've got a drilling program this year. 3 drills up there turning. It's going well. I was actually up there filming a virtual tour of the site.
Oh my goodness, you're gonna have to tell us about that in a second. Well, look, sounds like you're about to do it anyway, but why don't you kick off and give people that 1 minute overview of the business, then we'll pick it up from there.
Sure. Western Copper and Gold has one asset, the Casino Copper Gold project, located up in the Yukon territory. We've been developing this for about 12 years now. It is a large copper gold porphyry. We just announced a new resource, which is 2.4 billion tons in a measured indicated resource and 1.5 billion tons in inferred. So, large copper gold porphyry. We have a feasibility study that we issued in 2013 showing very, very good economics. We ran the economics at spot, I think, a couple weeks ago. 30% plus IRR, 3 billion plus net present value. So very strong project, very big project.
It's a very big project. It's a huge project, and that's the opportunity. It's also probably therein lies the problem. So I'd like you to tell me today a little bit about the business plan. What did you set out to try and build? Because this thing is huge. By anyone's standards, this thing is huge. And people employ different types of business models to move the company forward. I want to understand yours and wonder, at what point you stop building this thing out in terms of creating a large behemoth of a company and actually start monetizing it. So I don't know if you can sort of kick off and tell us what you set out to achieve.
Yeah. So, I mean, let's go back to the beginning, obviously. 2006, Western Copper and Gold spun out of Western Silver. And Western Silver developed a Penasquito asset and sold out to Glamis Gold, which was then bought by Gold Corp, which now is part of Newmont, for $1.6 billion. So Dale Corman, our chairman, a few other people in the company. I wasn't actually part of Western Silver. Obviously, everyone made a lot of money off of that. And what they did there is they took a project which had some drilling. They finished drilling it out, feasibility study, they got it permitted, and then they sold it to a major. And this is a reasonably common junior mining company sort of progress. So when we kicked off, that was the business plan, was to finish the feasibility study, get it permitted, and look during that time for opportunities to reward our shareholders and investors by selling the company. And that's still the business model, but I think it's changed a little bit, particularly over the past sort of year and a half, because we've got a few new directors that really want to drive this project forward and sort of see where we get. So I'd say the business model has changed a bit from before it was do this and sell. Now it's like, sure, we'll continue to look at opportunities to sell this project, but let's just drive it forward. Maybe look at bringing in a partner, maybe bringing in some equity as we move forward.
Okay, but it's huge. I mean, it's 14.5 million ounces of gold. It's 7.6 billion pounds of copper, all measured and indicated. There's going to be less and less people capable of stepping in to finance what is going to be a huge kind of equity debt program to be able to get that stuff out of the ground. So, at what point do you stop and say, right, we need to be having conversations, or are you having conversations now?
Yeah, I mean, it's been interesting. I mean, we've had conversations, I would say, for the past 5 years, and it's been really, really interesting because predominantly the majority of those conversations have been with gold companies, and I think that gold companies, like you said, I mean, 14.5 million ounces of gold. I mean, the eyes bulge out when they see that, and they get all excited. And they start to look at it, and as you said, I mean, it's a high capital cost project. And we'll hopefully get into this, there's perhaps some lower capital cost options, but the simple way to make money with this is to build, I mean, it's, 2 billion plus tons, right? You don't build a 20,000 ton a day mill. You gotta build something of fairly good size. So that does limit you. It limits you really to big gold companies. We're talking top 2 or top 3, and then copper. And I mean, for the copper world, for the copper guys, multi-billion-dollar projects are actually the bread and butter. They're the common projects. They're sort of what a copper project is.
This is what intrigues me. I want to understand these types of conversations that you want to have with these either large gold companies, large copper companies, or anyone else who wants to step into the breach, because that sort of capital, it's rarefied air. There's not too many people who could come up with that sum of money. That's not to say there aren't any. There are some, but it's very rarefied air. Which options would you prefer to look at? Because you indicated there that perhaps there's some lower CAPEX options available to you. So where do you think you need to sit to be able to drive value? Because the share price has been sort of a gradual decline since 2017. Since the beginning of 2017, you've seen a pop recently. People got interested again. So can you give people a sort of sense of where you think the value creation comes from?
Yeah, I think the value creation is really going to come from, you hit the nail on the head. Where you're going to create a lot of value. The thing that's exciting, at the end of the day, you would have a project here that's got a $3 billion net present value. And, today we've got a nominally 200 million market cap. So there's a huge disconnect. So how do you, narrow that disconnect? And how you narrow that disconnect is for people to see a path towards that capital being raised. So there are two ways to do that. One is to create a project which has a lower capital. People say, "Oh, wow, that's easy. Everyone raises that every day." And the other one is to bring in some partnerships so that you can start to see, people with deep pockets involved in the project. And so that really, and we're pursuing both of those paths. We're certainly having lots of conversations, and those conversations are, hey, get involved with the project, take a look at it. Maybe we set up some joint venture sort of project. Maybe it's just a small investment and you guys are involved, and you have sort of a ROFR on the project, and at the right time you sort of pull the trigger on it. And there's a lot of those models out in the market right now, and those are the things that we're looking at.
Okay, but they're two very different paths. Okay, so what I'm trying to get at is, what do you think? Because you know that you're the guy who knows most about this. Okay, your partners are coming in. I'm sure they're doing due diligence, but on the larger ticket item, $2 billion, those types of conversations, it must be a handful of people that you can talk to about that. What's stopping them? Because you've got more than enough pounds in the ground. You've got more than enough ounces in the ground. Is it because they don't know whether you're a gold company or a copper company?
You know what? That's a very good point. It's a very astute observation. I've always said, we've got, if you look at the projected revenue from this project, it's about half copper, half gold. And it's really close. Right now, there's actually a smidgen more gold than copper. Most of the time, it's more copper. If all of that was copper, I'd be talking to you here about a different company. If it was all gold, I'd be here talking to you about another company. That is sort of a pullback, but that's a small pullback. The other thing is, and I can't emphasize this enough, people say, "Oh, well, you must be talking to this big copper company and this big copper company." And I can tell you that I am starting to talk to large copper companies now. But I can tell you that started actually the end of last year, because copper was in the doldrums for a decade almost. And you're a big copper company, your whole corporate development team, they're selling assets. They're selling parts of assets to raise capital, to cover, shortfalls in revenue and all those other things. You're talking about closing down mines. That was the mindset for a decade in the copper business. And then last year, you started to see copper get close to 3. Then, of course, COVID hit. It pulled back, but then it actually bounced back quite quickly here, back up to, I think it actually touched $3 last week for a moment, and then sort of came back, right? So we're back into this good copper environment. The copper investors, have finally sort of, and the other thing is, and this is a thesis I talk about a lot, look around the world. Look at, let's say, a junior copper developer such as ourselves is basically the market for copper projects. There are, back to that handful, there's a handful of majors that could potentially, take this and spend $2 billion. There's less than a handful of projects out there.
No, I understand that, and I know you've got to put your best foot forward. And I know, looking at some of the numbers that you're using in the presentation, you're using $1,800 gold, you're using $3 copper, you're maximizing it. But the reality is, a large, and it's great for retail because it looks good. The IRR looks good, 30%, lovely, doing your job. But for the big guys, they're walking in, they're putting a 30-40% discount on this as a minimum, and they're seeing if the number still stacks up. They don't need it to be over 20%. They don't need it to be over 30%. If this goes through a few copper cycles, if it goes through a few gold cycles, right? So I think that's fair enough. But come back to the original question: is why aren't they pulling the trigger? Why have you not got a gold company over the line? Why have you not got a copper company over the line?
Part of it is that timing, particularly on the copper world. On the gold world, this is too big for the average gold company. When I say there's 2 or 3, there's probably 2. We know who they are. The good news is one of them is literally right next door to us. Our claims touch their claims. So anyhow, we'll see where those conversations go. So that's been part of it. It's been timing. And I think, you said you're an investment banker. You understand how All these things need to align to make these sort of deals work. And with a large asset like this, that's absolutely the case. Now, the other thing I talked about is potentially changing the project so that the initial capital is lower. And, the impetus behind that is, it is pretty simple, that it increases your potential partners, potential acquirers significantly. If I can drop that initial capital cost, it's going to be, there's two ways that I can drop that initial capital cost. First, there's a heap-leach right now, which is part of the project. It's the first part of the project, but it's not standalone. However, we found some high-grade gold last year. We're looking at, we're drilling that out right now. That's why I was up for Yukon. The idea is that can we incorporate that into the heap leach so that heap leach becomes standalone? Standalone heap leach, Victoria Gold just built a similar sort of grade as I think we would end up with. Heap leach up in the Yukon cost them $500 million. They did it on their own. You have a world of opportunities on that. The other one is you just take the project as it is and you look at just a bit more staged development. As you pointed out, you don't need a 30% IRR. You've got a solid IRR and, it's a staged development and you can get in there. It's going to be tough to get in there sub-billion, but let's say we can get it in for one and change. Then that becomes a fairly attractive project. So those are two potential changes that we're looking when we update the feasibility study, which is next year.
So, billion, that's still a big number. $1 billion is still a big number. Again, it increases the pool slightly, but not by much, okay? And so what's holding you back from starting with an even lower CAPEX project? Is it the grade? Is that the problem? Or is it technically being able to separate gold from copper, from moly, and be able to do that economically?
Yeah, if you do a heap leach, $500 million. If you're looking at this sort of milling operation to produce a copper gold concentrate, it's great. This is a lot. It's a large, low grade copper gold porphyry. If you look at the grade, it actually is higher grade than your typical BC copper gold mine. But you look at all those mines, they're 30,000 tons per day is probably a small one. Highland Valley Copper, operated by Teck, is 120,000 tons per day, which is exactly what we're talking about. That's the $2.5 billion project. So, do we go find a sweet spot in there, sort of 60,000 tons a day? Start with that, and then, to be honest, 5 years after that, you probably expand, and then 5 years after that, you probably expand again. And that's sort of, a staged sort of development, but it allow you to get in there for $1 billion and change. But yeah, it's great. And and the other way we could potentially change that, we've got a great exploration potential. We acquired this land package right next to us, Canadian Creek project. It's got a lot of targets there. You find a nice little high-grade bed, then you can certainly get in there for lower capital.
No more. It's big enough. It's big enough.
It's big enough, but if I can get better grade, everyone will be excited.
That's true. That's true, Paul.
Yeah.
Do you regret following the model to just build this up so big that it becomes unwieldy? Do you think there was a moment back in time when you sort of said, "Look, I tell you what, now let's just stop. Let's focus on making this, achievable, something that you were in control of, rather than relying on another partner stepping in." Because at 180 million market cap, you can raise so much money, right? So you personally, in terms of what you're in control of, have kind of limited your options. So you do need these conversations, these partners to step in and help resolve your future, don't you?
Yeah, I'll be honest. The first resource that we announced was roughly 1 billion tons. So it sort of came as a big girl, and then she just got bigger. So there wasn't much we could do about that. And the world changed. We developed this over 12 years. Think back 12 years ago, you had First Quantum announcing building Cobre Panama. You had, all those mines in Chile, Toromocho, Sierra Gorda, I could go on and on. These are all multi-billion-dollar capital cost projects. And it wasn't like, anything over $1 billion can't be built. It was these were dime a dozen, right? So that was part of the reason why we really developed this feasibility study optimized around IRR.
Yeah, I mean, that's why I asked about it, because, 12 years ago, I agree with you, when we were looking at projects, this was the model, build out the resource, pounds in the ground, that was the model. But I now actually call that old school. That's old school, because again, we're seeing more companies getting into early production to show a route to market, to show that the economics and the skill set of the management team to be able to get something up and running, because not many mines are built, right? So that's a consideration here, and that's why I asked you earlier, do you wish there's a point in time where you said we should have put the flag in the sand and said, right, now's the time to go?
Yeah, and one of the points I made earlier is that we've got quite a new board. We brought on Ken Williamson, who's ex-Gold Corp. We brought on Michael Vuitton, who was speaking of investment. Well, I guess he was equity sales for BMO. He's got $20 billion of deals underneath his belt. I mean, he's a big name in the industry, and the new board really is along that line. It's like, look, let's just go, and we'll certainly look at some better ways to raise equity, but they're not scared of $2 billion. And I hear what you said, like flavor of the month, but like, let's look. I mean, the copper market is a different market. It isn't gold where it's flavor of the month, right? I mean, the copper market, $500 million copper mines are rounding errors, right? I mean, to bring on the next wave of copper, which again, we've got a decade of underdevelopment after a number of years of overdevelopment, but now you're going to come back into this period where you need to be bringing on significant copper development, and you need mines in different jurisdictions. You need mines, that are going to produce significant amounts of copper, and that's exactly what we have. So, should we have sold it in 2012? Sure. When the market, everyone was copper crazy. But, we've added a lot of value along that. We haven't diluted our shareholders significantly. I think we actually have a better project there.
Okay. So talking about good districts, Yukon, very pro-mining, the Yukon Alliance up there. How are you doing with permits?
So permitting, the story of permitting is that, we were moving the project forward through permitting. And then, really what happened is we had all these tailings dam disasters. We had Mount Poly in British Columbia and all the issues in Brazil. So a whole bunch of concern on tailings facilities. So there was a sort of quiet period really that ended at the end of 2018 where, you look at our news flow, well, geez, what did you do that time? Well, I'll tell you what we did. We sat down with the First Nations, we sat down with the regulators, and we spent a lot of time talking tailings facilities, and we went through this process to really come to a consensus on that tailings facility. And so that was a key milestone. So that at the end of 2018, we issued what was called the best available tailings technology milestone. And so at that point, it was let's get back to permitting. However, we said, okay, if we get back into permitting, we need to update the feasibility study. If we're going to update the feasibility study, there's a little bit of drilling we need to do. So last year was the little bit of drilling. And we actually had a couple of real pleasant surprises with that little bit of drilling. So now is a little bit of drilling, and then it's feasibility study and back into permitting.
And you think that's it? Yeah, that's all you need to do. You're not going to have any issues. Given it, I know it's pro-mining, but have you had any conversations up in the Yukon which would lend you to believe that perhaps you're going to have to work a little bit harder than that?
Oh, I think permitting any mine in Canada, the US, wherever, these sort of first world jurisdictions is a lot of work. It is a lot of, and it's a big PR exercise. It is, I tell people, when we were in the thick of permitting, I've had more moose stew than I ever thought I'd eat in my entire life. And that's what you need to do. You need to spend the time in the communities, and it's got to be me. It's not like I can't just hire a consultant to go up there and talk to the people. They're like, no. I want to talk to the chief. It's a chief sort of conversation that you have, and it's a lot of work. But permitting comes down to one or two issues, and I can tell you what our one or two issues are. It's the tailings facility, the tailings facility, and the tailings facility. That's. I mean, people are like, yeah, sounds good. So we're happy with the mines, we're happy with the revenue. You guys have done this right. We're concerned about the tailings facility. So that's why we stopped and spent that time.
And you've got a solution.
Yeah, I mean, and there's lots of solutions. I mean, and it's an interesting exercise because you get a team of really bright engineers together, and they say you can do this and this and this and this, and it's like that's fine, but you got to bring that solution into the community, into the area, talk to the people, make sure they understand it, and get their buy-in. And that was sort of a key exercise that we've done.
Okay. Management and board hold 12% of the shares. You've got what's described as a private high net worth investors as 48%. I mean, is that, who is that? Do we know any names there?
Yeah, I mean, I can't tell you the names because these are sub 10% holders, so it's not public. But yeah, I mean, so our shareholder base, so that 12% is Dale and Mike. So Dale has, I think, 7 of that. Mike has, I guess 4 of that, and then the rest of us have 1. So they're the 2 big shareholders, and then that high net worth individual part. Really, I mean, there's a bunch of names in there, but there's probably a half dozen key names, and these are mostly people that have followed Dale through his career, made a bunch of money off of Western Silver, as we talked about. These are either high net worth individuals, or there's actually a fair number of sort of boutique brokers, and they manage a whole bunch of high net worth money, and they squeeze in 1% of Western, and suddenly that's $5 million,
okay,
or 5 million shares, right? So,
but all below the 10% level, so
all below
we don't know who they are. Okay, but so let's get to the bit where I think potential issues are. So you've got 10% institutional, you've got 30% other, which I assume is retail. So there's not a lot of free stock available. So how's liquidity?
I mean, liquidity is not bad. I mean, sure. I mean, you've got, but I mean, if you look at that, you've got about 30 to 40% free float, right? Okay, so that's out there, more or less retail. And so if you look at, I mean, the past couple of weeks, we've been trading 1 million shares a day over 2. And I mean, the one thing to always look at is that we're listed on the TSX, but we're also listed on the NYSE American. And our trading on the NYSE American is always significantly higher than our trading in Canada.
Why?
I mean, it didn't start. I mean, we started as a TSX listed company. We went down and initiated this listing on the NYSE American. When we started, it was significantly less. But I mean, every discretionary dollar of investor relations money that we have, every discretionary dollar of marketing money we spend on U.S. retail. U.S. retail, there's a lot of it. They still invest in junior mining companies. They're very, very good. And so we've slowly built up that base.
But you've had a recent spike in the share price. Why? What's happened there? What was the news? Because I haven't seen anything. I can't see anything. You've increased the resource, but it was already massive, so it can't have been that. Yeah.
You know what? I mean, if you look at our share price, I mean, as I said, right now, you look at the project described by the feasibility study, there's actually more revenue from gold. And we move a little bit with gold, but we move a whole lot with copper. A whole lot with copper. So, I mean, you had copper go down below $2 when COVID first hit. And then, as we said, hit $3, almost hit $3. If you take those 2 points, I bet you have our stock low for the year, and you have our stock high for the year. I mean, we really move with that copper price. That really, really drives things. And yeah, I mean, if you look at the last time that our share price was at this point, it was when copper was doing very, very well.
Okay, you've got about $7 million left, it says on the PowerPoint.
Yep.
What are you going to do with it?
So this year is is the follow-up drilling campaign to last year. And I should just, really just quickly talk a little bit about that. A couple really interesting things. I mean, and the most important thing for, our conversation has been, what do you think about this $2 billion capital cost project? Last year, we hit 55 gram per ton gold over 3 meters. So here's a big low-grade deposit we hit, 50 gram per ton plus. I mean, pretty exciting. It was the third time we'd hit that high-grade gold. We put that together. We found a bit of a zone. Goal is to go in there this year and further delineate that and see if we can put that together as a resource. So, I mean, obviously that presents a very, very significant opportunity to do that standalone heap-leach or maybe even a small mill, significantly lowering that initial capital cost. So, key goal of the exploration program this year. And then the other one is this new project we got next to us, just sort of going over there and seeing what we got. And so there's some untested targets that our geologists are pretty excited about. But yeah, so that is about a $3.5 million program this year. So that's 3.5 of the 7. We'll have a bit more money to spend on exploration activities next year, but really going into next year, the goal is to get this updated feasibility put together. So we're going to have to raise some more money between now and let's say mid next year. But I mean, right now, all eyes are on this exploration program.
So how much money do you think?
I mean, an updated feasibility study, it's an update. So it's, let's say $3 million is really what we have there. Okay. Our G&A runs around 2 a year. So, I mean, this isn't big capital study.
And so what do you think the new feasibility study is going to tell us? Because you did one, was it 2010? Is that about right?
2013.
13, sorry, apologies. 2013. What new news is going to come out of this that the market should care about?
Yeah, I mean, we're going to look at, like I said, I mean, if we bring this high grade gold in or higher grade gold in, we're going to say, we're going to really look at how can we stage the capital. And let's just say we're going to start with a blank sheet of paper on that. We're going to look at all of the potential ways. Do you start with a heap-leach? Do you start with a lower throughput mill? Do you start, with a simpler infrastructure? We're going to look at all those sort of opportunities to reduce that initial capital cost, make this something that, I'll be honest, that we could do ourselves, and people go, oh yeah, okay, I can see that path forward.
Okay, and okay, so that'll be sort of towards the middle of next year. I'm just looking at the various graphs and the comparisons, and obviously, like I say, you've got to paint this story in the best light possible. But what are you going to have to find with the drill bit to make this more exciting? Because I get the volume, but it's quite low grade, so I can sort of see why people aren't excited at the prospect of this. Because not only is the CAPEX huge, but cycles change both for copper and gold. And if we get a downturn, this thing will struggle a bit. So what do you need to find with the drill bit? What are you hoping for?
Great, obviously. We've got a 12,500 meter drill program. Over half of that is looking at this high grade gold. So, I mean, that is absolutely key to put that together. And then, again, on this Canadian Creek project, I mean, we're not just trying to say, is there a whole bunch more low grade tons over there? We're saying, is there a high grade starter project? Can you turn this into, let's say, a Red Chris? The Red Chris, they got in there, sub $1 billion, got it up and running. They've got ore for, 50 years plus there, but they're going to look at stage developing that.
Okay. Do you think this turns into a mine anytime soon?
I mean, we're going to get this. I mean, we did the plan is the feasibility study to get this thing right back into permitting. I mean, if you look at projects, even if we stay at the 2 billion, okay, even if we stay, and I think we'll be able to get that. We'll do some work on that when we get to that ballpark. Then I'm back to the, where is the cost? I mean, then you sort of take the step back and we say, where's the global copper coming from? And you really look at those upcoming projects. And sure, they're within the Rios and BHPs and that they have some of these projects in their portfolios, but there's not lots. And so if we have a permitted project in a jurisdiction such as the Yukon that adds up economically, and again, it's timing, so we have to be in a healthy copper environment, which we're now. I mean, I think everyone agrees that the next few years, and the argument is what is few, we should have a good copper environment. That's going to be a pretty exciting prospect.
Yeah, okay. But again, just to ask the question is, do you think this becomes a mindset, which I guess then was actually afterwards, when do you think this becomes a mind? Let's say your conversations go well. You find one of the two big guys says, yes, this is top of our list of things to focus on. Your feasibility stage, there's ways to go, because it's a huge project. It's a huge project, not just in terms of pounds on the ground, but what you've got to control in terms of the data set. So they walk in tomorrow. When does this thing get built out, and what kind of relationship is it, and how do you benefit economically?
Yeah, I mean, we've got. We're likely into permitting and back into permitting. Keep in mind, we've got some of that permitting under our belt right now. So we're back into permitting in the end of 2021, so the end of next year. And then you probably got 3 years after that, and you begin construction. So, let's say you're 2024 when you have a fully permitted project, start construction at that point in time, and move forward from there.
Right. So that's the ideal scenario. Okay.
That's the ideal scenario.
That's the ideal scenario. Okay. Cool. Well, look, Paul. Thanks very much for running through the story. It's one of the biggest stories we've spoken to, and I appreciate. It's all about timing. You know that as much as I do.
And it's a different animal, and we know it's big. We know it's low grade. We know people see this capital cost and their eyes bug out, and so it's been a good. I've liked where this conversation has gone, in the fact that we understand that we're looking for lower capital cost options. We would love for this thing to come in for, let's say, $1 billion and change. And then, particularly with our new board, it's like, let's just go. Somebody shows up at our doorstep and says, we'd love to be involved. We'd love to buy the asset. Great. But let's just go.
You're not desperate, but you want to get going.
We want to get going.
Brilliant. Paul, thanks very much for your time today. Let us know how things move along. Pick up the phone, give us a call. Let us know how it's working out, okay?
Perfect. Will do.
Cheers, Paul.